This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending September 26, 2020. Our question this week is, what is a bear market? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was down. It was the fourth down week in a row. The Dow Jones Industrial Average increased 1.34% on Friday, but it was down minus 1.75% for the week. The S&P 500 increased 1.60% on Friday, but it was down minus 0.63% for the week. And the Nasdaq increased 2.26% on Friday, and it was up 1.11% for the week. Looking at the week, we can see that the three main indices were down on Monday and Wednesday and up on Tuesday, Thursday, and Friday. Despite the 3 up days versus 2 down days, the market marked its fourth down week in a row. Which brings us to our question of the week. What is a bear market? A bear market is when there is a prolonged decline in the market of 20% or more from a recent high. The market recently hit a high on September 2nd, 2020. The Dow Jones Industrial Average is down minus 6.62% from that recent high on September 2nd. The S&P 500 is down minus 7.89% from its recent high, and the Nasdaq is down minus 9.483% from its recent high. The Nasdaq is in its third week of a correction. It is hovering around 10% below its recent high. The new unemployment claims were 870,000 versus 850,000 expected, a miss of 20,000. Continuing unemployment claims were 12.58 million, about a 167,000 decrease from the prior week. Congress still hasn't come up with a new pandemic stimulus deal, but the House is putting together a $2.4 trillion relief package. The White House has approved Oracle's deal to buy a 20% stake in TikTok, but China may not allow the deal to happen. New housing starts hit a 14-year high amid the pandemic and the economic meltdown. And the Boston Federal Reserve President Eric Rosengren stated that more QE would be helpful for the economy, but a fiscal stimulus from the government is necessary. New unemployment claims, congressional actions and inactions, corporate deals, new housing starts, and Federal Reserve statements are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up, down, or sideways is virtually impossible because predicting the news is impossible. However, the market is rigged to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be are the president and Congress. The president often cites the stock market as an indication of how well America is doing under his presidency. So he will do what he must to drive the market up. However, the Congress is in no hurry to see the market go up. A higher market, they believe, will bolster the president's chances for re-election. This is why there is no new stimulus bill for the American people. As the President and Congress battle over a stimulus bill, you can expect that the market will be very volatile until a bill is passed or until after the election. Do you own any stocks? If not, why not? Are you afraid that the stock market will fall and it will lose value? Well, the market will fall. After all, it has fallen for the last 4 weeks in a row. And even though the market recovered from its pandemic lows, it is near correction territory, that is, a 10% decline. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending September 26, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Roku, ticker symbol ROKU. It's in the second column. It increased 13.68% for the week, and it was up 2.33% on Friday. Roku is a streaming device company. It is the leader in over-the-top streaming devices. Its stock has been on a tear recently. It is the second time in a month that it has been the highest performer on my list. I did not have a trade on it this past week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of September 26, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY, though SPY crushed me this week by 4.60%. However, year to date, my portfolio is up 14.56% versus 8.02% for SPY, a difference of 6.54%. I am beating SPY by 6.54%. This week, equities, including puts, calls, and ETFs, make up 90.16% of the portfolio. Cash is 9.84%. The cash flow generated for this week was 1.20% of the portfolio account value. The account value changed by minus 5.22%. Ouch. Meanwhile, the S&P 500 ETF SPY changed by minus 0.62% this week. I sold option contracts on 8 positions this week, 6 calls and 2 puts that range from $85.01 to $406.68. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.